What's up, Colorado? Chris Lopez here, and welcome back to another Drinks and Deep Dive show. So today, our factoid is actually market data for Colorado Springs and Denver. Then we're going to jump into a deal analysis for a 3-bedroom, 1-bathroom house down the Springs, which is very close to a couple of rental properties that Jenny Bayless owns. And we'll go through a couple questions that clients have asked us the last few weeks. But first off, I'll introduce my guest. Jenny, good morning.
Good morning. How's it going, Chris?
Good. I'm glad you made a drive up here to the studio today. It's just fun to do it in person.
Yeah, like I said, it's always a new route to get up here on I-25. So it's always interesting making my way up this way.
So yes, the construction game.
Yep.
So I think most people know who you are, but if they don't, Jenny, you run our Southern Colorado division. You guys are doing a great job in the Springs, helping people buy and sell properties in the Springs, and you're starting to expand down the Pueblo as well. So Jenny is incredibly knowledgeable for the market, and that's what a lot of the shows me focused on today. But jumping into our market updates first, let's start with Colorado Springs, and then we can jump over to Denver. So I'm going to pull up. Can we share the screen there, Jules? There we go. So jumping our factoid here, Jenny, where do you want to start with just like what's happened in the Colorado Springs market from a high-level overview?
So broken record, same old, same old. However, there's a physical feeling, I think, regarding the market that is just a little bit less intense than it has been. So it's still hot. I mean, it's very difficult to be a buyer right now. I don't think the sky is falling. It's just there's a little bit of breathing room. You don't have to jump on something the second that it comes onto the market. You have a little bit of time to think things through. So I think that's important to just kind of point out and put into context. And I think that transcends to the data that we're about to talk about as well.
What's the inventory like from year over year and just compare the last couple of months?
Yeah, so that's what's kind of interesting is that inventory has been steadily going up a tiny bit. There's a little bit of a drop back between last month and this month. So that's kind of a little bit of a disappointment, but it's significantly less than where we were this time last year, which is wild to me because we're, right in the midst of COVID this time last year. So people didn't want people going through their homes. So the fact that there's even less on the market now is a little bit wild. But yeah, so we still have room to go. We were thinking that things were going to show a little bit of an upward trend last month, but it went back down again inventory wise.
Interesting, because here in Denver, for our inventory, just kind of give some context here. So June 2021, you had a total active 673 properties at the end of June. June 2020 was just under 1,200.
Mm-hmm.
So here in Denver, we've actually seen our inventory build more from last month. So this is actually kind of one of the first times we're kind of seeing a little bit divergent, some data between our two markets.
Yeah, I don't know why either.
Yeah, I expected yours to be a little more similar to Denver because, I mean, last month we had about 2,000 active inventory. This month about 3,000. So I mean that's a 50% growth.
That's great.
From May to June.
Yeah.
So it sounds like a lot. It's still very low inventory compared to years previous. But we're seeing some more inventory build there as well.
Mm-hmm.
So we see ours go up from May to June by 50%. And yours went down by 5% or 10%. So that's very interesting. The other thing too, what about, because I saw this data for the Springs, let me get my mouse working here, is the showing traffic.
Mm-hmm.
Because both for Denver and the Springs, the showing traffic has declined significantly. Like in Denver, this is why I'm surprised your inventory hasn't gone up more. Because, back in February, March, April, we were between 20 and 22 showings here in Denver per property. And that's almost double what it normally is in the past couple of years. And we typically see like a decline come summertime for showings per property. And we're definitely seeing that seasonality now, but like a much more dramatic drop off. We were at 20 or 21 in April. May was 18. June is 14. Historically, we're still between 8 or 10, so we're still a lot more showings per property.
Mm-hmm.
But you're seeing the same stuff in the Springs as well, Jenny.
Yeah.
So what happened here on my mouse? So your data looks very similar.
Mm-hmm.
So you went from 18 showings to like 12 showings in
yeah,
June.
which is still higher than past years
Yeah.
on a per property basis. But I don't know. I'm not sure if everyone just kind of is tired and went on vacation, not going to sell their house, not going to look at houses. I'm not really sure what's going on, but yeah, it'll be interesting to see kind of how the rest of the summer plays out for sure.
And some other good news too. I can find my reference notes on here, is that rent growth has gone up.
Mm-hmm.
I mean, year over year, we're sitting around right about 5% rent growth. Because I noticed too, like, I mean, rents were pretty flat last year during COVID.
Mm-hmm.
And I mean, what, late winter, early spring, we started just seeing rents go up. And now we're starting to see it in the data.
Yeah.
So that's a good thing.
Yeah, I think it makes sense because most landlords like to keep rent steady for good tenants and everything. And as tenants decide, hey, I can actually move, I can go to a different property to live in. That's an opportunity for owners to also increase their rent rates as well. So that's probably contributing to that, would be my guess. Because I'm actually seeing a couple of my tenants leave this summer. I didn't have hardly any turnover last summer. This summer, I guess they're feeling, more comfortable moving up or whatever it is that they're doing. And I'm using that personally as an opportunity to raise rents.
Have you had issues with, renting them out?
I guess we'll find out. I'm currently renovating a couple of them, so yeah, we'll find that out later.
And as a plug, I mean, one of those is one we're actually going to walk tomorrow.
Yeah.
Going to be a cool YouTube video, property walks, before and after photos, what you're doing in the property, a light analysis too on why we're doing it. So we are recording that, should be out sometime, and I think probably late August we'll have that video out. So FYI, check out YouTube, everyone. All right. So as far as data here, same thing. We're very much still in the seller's market for Denver and the Springs. Denver is seeing a little bit more of an inventory build than the Springs is, month to month. Both are still historically low compared to last year and just previous years. We're starting to see rents bump up as well. So same old, but rents are going, and we're getting a little bit less pressure on the buy side, which is nice.
Mm-hmm.
All right, so let's move over to our deep dive. I'm going to pull up the spreadsheet here, Jenny, because this is a property that you and Leah helped close the client. And it's actually a client that Press and I have worked with up here in Denver. She's bought, I think her and her husband bought, one property up here, one rental up here, and the slash they went down to Springs.
Mm-hmm.
So I know you guys work with them. So take us a step back and talk to us before we talk about the property, why they put their focus down to Springs versus Denver. They tell you why?
Yeah, I mean, we're getting a lot of people that have previously invested in Denver, but are attracted to the price of entry in Colorado Springs. I mean, the fact that they were able to get a single family home, what we're about to discuss, the numbers are probably very interesting to Denver investors just because they're so much lower, but the return is not that much different. So I think it's a really good opportunity for people.
Great. So this was a 3-1 detached single family home,
mm-hmm.
investment property. And what we're doing right now is we are all plugging this live into the spreadsheet, the deal analysis spreadsheet that Joe Massey provides for us. It's part of our toolkit, so feel free to go to the website and download it. You can use the exact same tools that we do. So 3-1 detached. What was the purchase price of this property?
So they bought it for $283,200.
All right, we'll run up to 283 to keep it simple.
Mm-hmm.
So give us a context for just kind of the layout, the neighborhood. Actually, no, more context because you own one or two rentals that are pretty similar. You said close by, right?
Yeah. So I actually own 2 rentals on the same street. They're all cookie cutter. So it was very easy to answer their questions because I've had, 4 years of rental property history on that street. So solid rental area. It's kind of wild. I want to focus on their deal, but just to kind of show everyone the historic of this neighborhood, when I purchased my rental properties there, I believe that they were renting it for like $875. And as you'll see what these clients are renting the same exact property for.
Okay.
So it's pretty fun to look at that.
And finding the property, this was just, MLS.
Mm-hmm.
How was the contract process? Multiple offers?
Yes.
Competitive?
So same story, multiple offers. I guess what was told to me on that was that the seller had hesitation selling it to investors. But Leah brought up a compelling point to the listing agent. Well, tenants need places to live too. It's not like they're going to just buy this house and let it sit vacant, like it's going to house somebody, and
there's going to be value in the marketplace.
Exactly. Yeah. It's, giving tenants a great place to live as well. So that resonated with the seller. So they went ahead and accepted their offer. They did go.
Shout out to Leah.
Yeah. Leah is awesome. So shout out to her. But yeah, so it was listed at 260, and they offered 25,000 over ask. So they ended at 285.
Okay.
So we'll get to why the price decreased later on.
Okay, perfect. So acquisition costs, I mean, just a ballpark there for.
Yeah. So about 6,500 total. So
okay. Is that including the loan cost or separate?
That is including the loan cost.
Okay, so we'll put about 5,000 in the spreadsheet and the 1,500 on top of that's hard coded.
Yep.
So let's go through the get in contract. Obviously, multiple bid situation. They went in over ask. A few bucks got dropped off. Inspection items.
Yes. So there was a structural issue come inspection time that they found. So there's a lot of negotiation. I guess things got a little tense at some point. They thought that they're going to have to end up walking away, but they held strong to their numbers. So they really, the clients wanted 7,500 off to take care of the structural issue. And because of lending requirements, they were only allowed to get a $5,700 seller credit. So the difference was in purchase price is taken off the top because.
Oh, so they actually agree the whole full 75?
Yes, after a lot of back and forth.
I thought you were say, I thought it was great.
Yeah.
Okay. So I was actually making notes here to say, great, let's run. Hey, I thought they got 2,000, so the 7,500. Like, is that worthwhile enough to blow up the deal? But they got the full amount.
They did.
And so what Jenny was referencing there, kind of take a step back. So as you go under contract out there, buy a property, the first phase of the contract is the due diligence phase. You'll go out there, get your inspector, sewer scope, radon test, all that good stuff. And then that's like round 2 negotiation between the buyer and seller. And the most common area where deals fall apart. This one found some issues, structural stuff. 7,500. Trying to change, but not too bad for structural.
Yeah.
Could be another 0 on there in some instances. So got seller credits of 5,700, and that is on investment properties. That is up to about 2% of the mortgage balance. So primary, it's 3% of the mortgage balance is what seller credits can do, and that's why we have to max out there and then take a couple bucks off the repair price. So initial repair costs, 7,500 for the structural.
So they haven't done it yet. But to get it rented, they had to put $3,500 into the property because there's some pet stains on the carpet. The bathtub needed a little bit of TLC. So in order to get it top-notch property, $3,500.
Okay.
Yeah.
And they're going to do the structural
down the line.
Down the road.
Yeah.
One of the things we just do at some point. Okay.
Yeah.
Interest rate on the mortgage. So we're doing a 25% down payment, I assume. Actually, why did I say I assume? Let me ask you the question.
Yeah.
I'm going to rephrase that, Jenny. What down payment did they do?
It was not 25%.
I figured that after I caught myself.
So part of the environment that we're in, properties are not appraising. They're just not, the values are not catching up to what the market is demanding. So they had to put in an appraisal gap. So their loan is for $202,000, which comes out to about 28.5% down.
All right. So 28.5% down.
Yeah.
And that was due to just it came in or $7,000 under appraisal did?
270 is what it came in at. So
that increased our cash to close by we went from
about 13,000.
Okay.
Yeah.
So not a huge amount. Some more equity down. What's their interest rate?
3.375.
Ooh, that's wonderful.
Yeah.
3.375, 30-year fixed.
Yep.
30-year fixed. All right. Going back to your potential spoiler alert, what did this rent out for?
$1,450.
Were you surprised by that?
I was shocked. I told them to underwrite it at $1,400.
Okay. So we're gonna So we'll start with 1,400. Actually, we'll leave it at 1,450 before I run that.
So I was super pumped for them when they said that.
Vacancy 3%, rent increase 3%, appreciation 5%. We'll just put effective tax rate to 25 to keep it consistent. Property management. So we got Denver investors, and they live in North Denver, if I remember correctly. Self-managing or property manager?
So this is kind of a fun fact. Despite only being an hour away, this couple has never set foot in the home. So it's the best of both worlds. They're an hour away from this house. They can go down there if, there's a major issue. But, Leah worked with them. She was their on the ground person to get in there for inspection, showings, all that good stuff. And they've never seen the home. So now they turned it over to a property manager. Same thing. That property manager has taken it and run with it, and obviously getting very good rents for them as well. So I thought that was pretty interesting.
I like that style.
Yeah, me too. Yeah. So 10% is what we're using for that.
So 10% for PM repairs and maintenance.
So they're actually budgeting pretty conservatively at 10%.
Okay.
When
was this house built?
In the 70s.
Okay.
These houses are pretty solid, generally speaking. The bones are really good. So I think they will be pleasantly surprised with that number. Just a guess.
HOA?
Though. Nope.
No HOA. Taxes, real estate taxes.
$1,000 a year.
Property insurance?
$1,100 a year.
And then how utilities, is the landlord paying it, or is it all in the tenant's name?
All tenant.
Okay. Mm-hmm. And this is through because in Colorado Springs, you have basically one utility for everything, right?
Yeah. So this particular house is all through Colorado Springs Utilities. They would have to do trash separate, but everything is set up through there.
All right. So tenant pays for everything. Landscaping, snow removal, tenant's responsibility?
Yes. And that was one of the major features that these clients liked about the property, is that it was recently xeriscaped in the front yard. So they don't have to have any landscape surprises from the tenants. There's less for them to worry about in the long run. So yeah.
Less for them to kill by not watering it?
Yes. Yeah. Can't kill rocks, I guess, right?
All right. Any other inputs?
Nope.
All right. So going over to the cash flow tab here. So we restate a lot of data on here. So they bought this house, a 3-1, for about $283,000 down, about $85,000 all in between their down payment, closing cost, and some initial repair cost. And annual rental income is about $17,000 for the year. After you subtract out vacancy and all the expenses, their NOI is just north of $11,000 a year. Annual mortgage payment is about $10,000 a year. Their cash flow is about $600 a year, or about $50 a month. Mm-hmm. What was your reaction when they ran these numbers?
I mean, I think this is just a really good example of investors they're in it for the long run. They have a very long-term view on this property. It's a solid property, growing area. They've not had to put a lot of, miles on their car to come down and see it clearly. So I think that this is great. If I could buy a property that I don't have to put hardly any, work into or time into, and I'm going to break even on it, considering all of my contingencies, and then getting all the other benefits to real estate, I think it's a winner.
And that fits their investing goals. I mean, their clients say they're a young couple, they have a family, they work, they're raising kids, like they're busy.
Yeah,
their full-time career is not to go out there and invest in real estate or go knock on doors or do a burr.
I think they have a really good perspective on their real estate goals. Yeah. They are looking 10 years out. So, and asking them what's their plan for this property, they're going to, see, and they're not even going to look at it for 5 more years, see where the equity is at that point, and then see if they'd be able to tap into that, leverage that to purchase additional properties. And, I would assume that the way that the rent has been going on this property and on this neighborhood, that, they'll be able to increase the rent to cover those extra leveraged costs. So I think it's an awesome, solid investment for them.
So I'm actually going to switch over to the long-term analysis. You said 5 years out was kind of the first major, like, hey, what's going on here? Yeah. What can we do? So at year 5, according to the assumptions we put in there of 3% rent growth and 5% appreciation, and this has some default stuff built in here for inflation of expenses as well. Mm-hmm. Cash flow will be just under about $2,000 a year. It's all projected year 5, so $2,000 a year in cash flow, but total equity of $180,000. Now, of course, that's including their down payment of about $85,000, but they'll have about $100,000 in equity of additional equity.
Yep.
that did not cost anything between market appreciation and their tenants paying down their loan principal.
Yep.
So $180,000 in equity. That will probably get some options to maybe pull out some cash.
Yeah.
Or sell and 1031 and trade up.
Exactly. Yeah, they're going to have so many options on this house, and obviously we can't predict the future, but my hope for them is that this house is as low maintenance as we're anticipating that it will be, and it'll just be a solid property to sit and grow for them.
Great.
Yeah.
All right. One last thing I want to look at just so I stay up to date, because this is how I love kind of learning about the Springs market. So looking at about a 4% cap rate, which is similar cap rate we're seeing up here in Denver.
Yeah.
And again, this is pretty conservative underwriting. We could change that and make it a higher cap rate, but right around a 4% cap rate.
Yep.
So again, similar returns what we're seeing between Springs and Denver, but just a lower price point.
Yeah.
And potentially maybe a little bit longer runway, since Springs tends to trail Denver by a year or 2, 3 years.
Yeah, I think so. And I mean, even at the rent rate that they're at, which I'm so pumped for them, it's an awesome rent rate. It's still considerably below the market average for a 3-bedroom single family home down there.
So hopefully push it up.
Yeah, I think that they have room to grow on that as well, in addition to what the market's already giving them.
Awesome.
Growth. Yeah, I'm so excited for them.
Congrats to the client, and great
Yeah.
job to you and Leah for getting it done and making it happen, because it's not easy right now. All right, so moving over to some of our questions here as we go through our questions round in the deep dives today. So Jenny, questions that clients and listeners have asked on here. A couple, I think came out 4 or 6 weeks ago. We did that corporate rentals podcast. I forget our guest name, but she's crushing at corporate rentals.
Diana, yeah.
Diana, I know you had a client start doing it. You've had more clients now. But what is going on with corporate rentals, and what are people doing? Like, what's the activity been like?
Yeah, so it's it's been really interesting to dive into that niche, learn more about it. Obviously I don't have hands-on personal experience for it, but I'm learning through our clients, learning through Diana. We have another contact, Cindy, who also runs a similar type of a management company down there. So learning from them. We have one client that we're hoping to do a deal analysis with after they've gotten everything up and running. They closed on a townhome with Leah, I think about a month or so ago, and they're currently in the furnishing stage of it, and they're getting it ready to become a corporate rental. They're really excited about that, and the returns that are projected are really impressive. They have a solid newer townhome, so we're expecting pretty low maintenance on that. We think that it's in an area that is expected to grow because of the innovation that's coming around there. And then they're also able to reap the benefits of the cash flow by turning it into a corporate rental.
What's the cash on cash for percentage of numbers you're seeing with these corporate rentals now?
I think we're guessing about 7%. So I'll definitely want to get real numbers once everyone is kind of settled into it and seeing where things are landing. I also want to collect more data regarding initial startup costs, because that's a pretty big investment. Probably $10,000 is what I've been
big check to write.
Yeah, for like furniture and everything. So I'm really curious to kind of see how their journey goes on that. And then I also have a client that I'm working with. We're supposed to close next week. It's a new build, and he intends to do the same strategy on that. And we've just had a lot of interest from other people that want to move to the Springs for their investments, but they also want to be able to have more of cash flow than what the market's currently offering on long-term rentals. So I'm really excited to see where the strategy goes for people.
Great.
Yeah.
All right. So we got about 5 minutes left in here. We got a dual-ended question here. I'm going to ask you first, Jenny.
Okay.
We just hit the halfway point of the year. We published our 2021 Colorado book, a couple months ago. What's your investing goals for the rest of the year? What's it look like?
That sounds like a familiar question from what we were prepping for. So my investment goals for the rest of the year is, I'm really happy with all the properties that I have right now. 2 of them I'm undergoing some renovations on, or planning to.
And they're like $20,000 to $30,000 renovations.
They're decent.
They're decent ones, right?
Exactly. Yeah. So we'll definitely document those for listeners and everything, so that they can kind of see what I'm trying to do. So I'm trying to do that in hopes that I'll be able to make a return off of the rent bump, as people are leaving for that. And then I'm just stabilizing the rest of my portfolio, and I'm really happy with it. So yeah, that's my plans for 2021.
So my plans, and originally this is a question Jenny would ask me. So I got the opportunity to turn around first. So my goals for years, I just like 6 days ago, I just closed on a rental property up here in Denver, house with an ADU. So pretty solid number. I like it. Just put 15% down to max leverage. It'll cash flow a little bit, but again, just a long-term play, 5-7 years, maybe make a move with it. Rest of the year, I'm actually in the process of investing in my first syndication deal, just limited partnership with a retirement account. Going to put some money in there, and that's been a very interesting process, learning up all the self-directed, actually a solo 401k, and there's a lot more paperwork and details than I expected.
Yeah.
Which doesn't necessarily go well with me, but I'm over that hurdle now. Plunking the first chunk of money, see how that, to invest in there. I'm excited about that. Just a little bit of diversification and just to learn about it. Like I know lots of people that do both sides. They bring the deals or make the deals, but they also do the limited partnership as investors. So I'm excited to do that. And for the rest of the year, don't have any other specific investing goals. Like those are my high level goals. If I can do a couple good investments every year, I'm very happy.
Yeah.
In terms of where's all my attention and extra money is going, is kind of reinvesting back into growing the business and going from there.
Yeah.
And then buy another couple properties next year.
Great. What's your number? What's your property number? Or do you have an NOI number?
I have more of an NOI number.
Okay.
My NOI is about 13,000 I'm shooting for.
Mm-hmm.
When I get there, I'll readjust. I'm definitely over 50% of the way there, so I'm very happy about that.
Yeah.
But right now, that's the goal I'm working towards. And when I get there, I'll reevaluate. But that's head down doing that. And I have the 13,000 as a buffer. It's hey, I figure for $10,000 a month, a good roundup. I always like to buffer things and round up.
Yeah.
So that 3,000 is just buffer space. And I know my budgeting skills go, so I try to buffer more because my budgets don't align always with reality.
Yeah, I'm an accountant, and I can say the same thing for me. So I think that's pretty much for everyone, is that, especially now I'm kind of choking on some of my invoices that I'm getting for these rehabs because numbers have changed quite a bit over the last couple years.
It's more expensive.
Yes. Yeah. So I'm having to recalibrate a lot and adjust accordingly. So
adjust your spending or just your expectations?
Expectations. Yeah. So
so you're still writing a check, but you're just
yeah.
Okay.
I'm well, that sucks. I guess we're going to have to, pick out a cheaper tile or something like that. Yeah. In the property that you guys are going to see tomorrow, our landscaping ran over because there's a few hiccups. So I had to get rid of the stone, countertop that I wanted to get, and now it's going to be laminate. So
let me ask you this,
yeah.
because I've noticed about myself. So as you've got a 1-year-old now, or a little over a 1-year-old.
Mm-hmm.
As you start a family, have you cared less about some of those details and some of the amounts? Yeah.
Yeah. I'm just whatever. I just want it to be done. I'd rather hang out with her than, waste brain power over that. So
I've had the same thing. I'm definitely willing to pay a little more for convenience. All right, well, whatever, that's it. And if that pushes goals along down the road, that's been a big adjustment for the last couple of years. Or not adjustment, just a realization I've had.
Yeah.
And just really coming to, we're logical in the way we think. Just saying, hey, you know what? When I do this, cool. Thought about it, made a decision. I'm good with it. Okay, whenever a couple $1,000s. But whatever. Here it is. I've really adjusted. I don't care factor has gone up a few notches.
Oh, mine has gone up unbelievably, I would say. Yeah. Especially for, some of the hiccups that we've run into at this house. I'm my past self a couple years ago, I would have been down there, doing shoveling stuff and all that good, all those things. And now I'm just no, I just have too much other things on my plate right now. So, yeah.
Jenny, this has been great. So again, if you're out there, if you guys are interested in investing in Colorado Springs, reach out to us. You can reach out to Jenny at Envision REA, or you can go to the website, denverinvestmentrealestate.com, fill out the consultation request. That'll get filtered out to Jenny as well. Or just investing in general in Denver or Pueblo, reach out. We focus a lot on helping people look at their situation, identify their strategy, match them up with the right strategy and market, and then act as your agents and execute on there and transact. So Jenny, you guys are crushing it down there. So congrats. And thanks for coming on the show today.
Thanks for having me, Chris. I appreciate it.